Hello and welcome everybody to the weekly market forecast for Wednesday, June 7th. This webinar is brought to you by OctaFX, the award-winning Forex broker offering some of the lowest spreads in the industry. Let's jump right in, guys. First of all, a little housekeeping quickly, a couple of disclaimers. First of all, we have a risk disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. Secondly, a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute investment advice. By that, we mean that we're not giving out specific trade recommendations. It's more educational in nature, this webinar. Next up, a little bit about me, Dan Blystone, FX market analyst. I started my career working on the floor of the Chicago Mercantile Exchange, the CME. I traded futures professionally for several years, and I also worked as a retail futures and forex broker, so I have some understanding of that side of the industry also. Let's take a look at what we're going to cover today. We're going to look at key support and resistance levels to help you in your trading. We're going to look at both recent and emerging chart patterns, so we're going to look back and forwards. And we're going to cover trading strategies, specifically one trading strategy which utilizes finding yourself within a trend and looking for pullbacks within the trend. And so let's talk briefly about the tools that we're going to use, the key takeaways from today's presentation. We're going to look at trend lines and patterns using trend lines. So we're going to look at channels, flags, triangles, that kind of thing. We're going to look at multiple time frame analysis. So giving yourself an edge by being aware of what's going on different time frames, and typically longer term time frames. It's very helpful. And we're going to take a look at moving averages and moving average crossovers. And finally, we're going to look at momentum oscillators, the technical indicators that measure momentum and typically oscillate on a scale. For example, RSA oscillates, or it moves on a scale from 0 to 100. But we'll get into that when we get into the presentation. Something else to be aware of when you're doing technical trading is always, it's good to be aware of the news that's coming out, economic releases. So we're just going to touch on that quickly. 3:30, we've got GMT, we've got crude oil inventories coming out. So if you're trading a commodity currency, such as the Canadian dollar, Australian dollar, that could be interesting. Consumer credit indicator, it's important for the US dollar, but relatively light on the news front today. But the quiet before the storm, because tomorrow we have the ECB interest rate decision in the press conference. So we could see some potential volatility tomorrow in the euro. It's a big day. Okay, let's jump over to the charts, which makes up the most important part of today's presentation. First up, I'd like to look at one of the crosses, the euro against the New Zealand dollar. I think we've got an interesting pattern here. We have a nice, well-formed up channel. Looks like it's actually at a critical juncture right here. It's testing the lower trend line here. And looking at the moving averages on the daily time frame, we can see that we're actually in bullish territory. So I'd be looking for a potential bounce here. We can see there's support of the 200 period moving average down here and the 100 period moving average also, but we also had a crossover here indicating a potential trend change. So it's really at a critical juncture here, and it's actually poking its way a little bit through this lower trend line of the channel here. We also have stochastics pointing downwards, so it could go either way here, but we know it's at something of a critical juncture. Let's move over and look at gold. Gold, similarly, we have a nice, well-defined up channel. We can see the classic 50 period crossing over the 200 period moving average here, known as the death cross. Nice bounce, down move off of that. Price has been an uptrend since then. Well-defined lower trend line, well-defined upper trend line, and we saw another crossover here indicating a potential bullish trend change and supporting gold right now. So Keep in mind, guys, that when you see the moving averages far apart, this is something we're going to discuss in the system that we're going to talk about later today. When the moving averages are far apart, it indicates that the trend is in place. But when moving averages converge, they come closer to crossing over, it tells you that there's a possible trend change imminent, and that's a key part of the trading strategy that we're going to look at later on today. Wanted to pull up. I mentioned that we're going to look at some setups that had happened in the past and try and learn from those. So this is EuroCAD, another cross on the 4-hour chart. We saw a well-defined channel here, and we saw a really nice breakout take place recently. So we saw a price poke through here, actually came back, and you had a second chance to get into it here. And then there was really nice follow through to the upside here. Nice 30 pips, roughly, it looks like, of a pretty straight up move if you caught this breakout to the upside. So I mean, there's a couple of things that can happen when you have a price contained within a channel like this. Price could bounce here, but if it does break through here and it's a well-defined trend line, you might be looking for some nice follow through to the upside, which is what happened here. Next up, let's look at the big one, Euro USD. We can see that price is consolidating underneath this major horizontal trend line here, and we're expecting a possible shake-up tomorrow with the fundamental news coming out with the ECB interest rate decision. So it's kind of the quiet before the storm again here, but technically we have a nice uptrend line here to the downside. We're above the 200 period moving average, so we are in bullish territory. And we can see that this has been tested several times, this horizontal trend line. So what we might expect if price is able to get through here is to see some nice follow through, a nice move to the upside. But let's see what happens with the news tomorrow, because that's definitely going to trump anything on the chart here. Similar things going on in the pound here. We can see price has gone up and tested a key horizontal resistance level. We do have a crossover here, the 50 crossing above the 200, indicating a potential trend change. Stochastics down here pointing upwards, indicating bullish momentum, not yet into overbought territory, which is above the 80 level. So again, this is a pair that may get shaken up tomorrow with the news coming out from the ECB. Next up, let's take a look at the Swissy dollar Swiss. This is kind of an interesting chart to look at because we're close to multi-month lows in this pair. So if we take a look here, where we are right here, if price trades much lower, we're going to go back to being lower than all the way back here, November of last year. So we might see a nice breakout to the downside here in dollar Swiss. Zoom out a little bit and take a look at what's going on here. We can see there's a nice trend line to the downside and a nice horizontal resistance level to the upside also. Going through the charts, I like to look at the longer term charts also. I think that gives you an edge. You can pull up some really important levels by looking at these monthly charts. You don't have to do it very often, of course, because they don't change very often. But looking at the Australian dollar monthly chart, we can see a very well-defined upper trend line here, where we might expect to see some major resistance. And also to the downside, we got a nice upward sloping trend line, which could be providing support. So that's just something to keep in your toolbox in case you're trading the Australian dollar against the US dollar in future and it comes up close to either of these levels. Let's take a look at the dollar CAD. We mentioned we got crude inventories coming out later on today. This is actually on the weekly time frame because it's such a nice channel. I had to put it on the weekly to catch all of it. So we got it in a really well-defined up channel here in bullish territory on the weekly chart above the 200, above the 100 simple moving average here. And so if you be watching and trading the dollar CAD, you could be looking at the crude inventories, and if crude inventories come in better than expected, and if there's more, if there are more crude inventories than expected, it's actually negative for oil. And because there's a positive correlation between the Canadian dollar and oil, that could be negative for the Canadian dollar. Next up, let's take a look at gold. We can see that gold here, we've got a well-defined trend line to the downside here, a moving average cross here, 200 and the 50 period again. And so basically gold in bull territory with the moving averages and the trend lines supporting it to the downside. Stochastics, we're looking at RSI here, not yet into overbought territory. Next up, wanted to pull up the GEPI dollar yen. The pound against the yen. British pound, one of the most volatile pairs here. We have a pretty well defined channel fit going to the downside here, daily chart here. And so we're looking for potential bounces off of this upper trend line or lower trend line here. And let's zoom out and take a look at the bigger picture a little bit. So we can see that we're in something of an uptrend here. So we may be favoring breakouts to the upside here. This looks kind of like a flag pattern actually. Okay, so next up, guys, let's take a look at our trading system of the day, which uses the concepts of trend, pullback, and breakout. So what you're looking for with this system is you're looking for the moving averages to be well spaced apart, and so you're looking to find yourself within a trend. In this case, we find ourselves within the uptrend, and you're looking for a pullback within that trend. So the three moving averages we're using in the system are the 200, the 100, and the 50. So we can see, because the moving averages are well spaced apart, that we're actually in a good uptrend. So what happened within the context of this uptrend is that price pulled back to the 100 level. So that's one of the rules that you're looking for with this system, is for price to pull back within an uptrend when the moving averages are nicely spaced apart like this, to pull back to the 100, and then the entry trigger is to have the stochastics moving from below 20 above 20 for a buy setup. Okay, so let me run through the rules again one more time. You're looking for a trend up or down. In this case, we're looking at an uptrend. You're looking for price to pull back to the 100 moving average. And keep in mind that when you're looking to identify the trend, you're looking for the moving averages to be all spaced apart, not crossing over. Remember, when we're looking at the other charts like gold and we looked at the crossovers, that's indicating a potential trend change being imminent. In this case, it's indicating that you're in a good trend and the trend change is not imminent. So you're looking for the moving average to be spaced apart, a pullback to the 100, and the trigger, the breakout part of it, is when stochastics breaks out above the 20 level here. So I'm just going to zoom to the front of this and just hold up the rules for you here a little bit. So trend, pullback, breakout system, we're looking at three moving averages, the 200, the 100, and the 50. You only trade when the three are in correct order. So right here where you got a crossover, or here where there's a crossover, you wouldn't be trading that. The buy entry is when the stochastics move above the 20 level. So they're moving out of oversold. And the other factor that you have to have in order to get a trade is for price to pull back to the 100 simple moving average. So moving over, looking at silver now. Here we've got a nice instance of a sell signal coming using this trend pullback breakout system. And let's go through it one more time to make sure it satisfies all the criteria. So we can see that the moving averages are correctly spaced out the way they should be, with the 200 period the furthest away from price, the 100 next to it, and then the 50 closest to price. So we saw price pull back to the 100 period simple moving average. we can see the moving averages are correctly spaced out. And then we also had the entry trigger, which in this case was the inverse of the prior example. So the entry trigger in this case being stochastics moving from above to below 80. So there was our entry trigger. And you can see that this trade got you into the overall trend. It got you back into the trend kind of at a discount. That's the whole idea of this system, is to capitalize on getting into the trend at a good point, at a safe point. So this trade got you into this downtrend at a bargain, and you didn't get shaken out of it at all. The next question logically is, so where do you place your stop loss? What's your profit target? That kind of thing. The recommended way of managing that would be to, in this case, to place your stop loss just above the swing high here, or it would be below the swing low in the case of a buy entry. And then to place your profit target at least 2 to 3 times the amount of your stop loss. So let's say you had your stop loss at 10 pips. You might set your profit target at 20 or 30 pips. Something like that would be a reasonable way of setting up your risk-reward ratio for this system. Another thing you could potentially do with this system is scale in and out of the trade and move your stop loss. So let's see exactly where you would have got in here. So the bar in which price moved from above 80 to below would have been this one. There's also sort of a mini shooting star candlestick right here. So you would have placed your stop loss right here, and what you could actually do is also move your stop loss up once price is going in your direction to further mitigate your risk. Another thing you could do is scale out of a winning position. So you might take part of your position off after a 10 pip profit, another part of your trade off after 20 pips, another part after 30 pips, for example, is another good way of managing your position. Next up, moving on from the system, a couple more charts that I wanted to pull up. Here's a good example of how you might be using a Fibonacci retracement pattern. We have a nice downtrend here in one of the crosses, Australian dollar against the New Zealand dollar. And we can see that price is retraced past the 23% point, 23.6 retracement level, has not yet reached the 38% level. So looking at this fib retracements here, you might expect to find resistance here at the 38.2 level, and again certainly at the 50, which is not a Fibonacci level, but they put it in there, and it's always an important level in terms of retracements. You could also be keeping an eye on the stochastics here to give you a clue of how the momentum in the market is playing out. And finally, I wanted to pull up another short-term chart. We got dollar-yen on the hourly chart. And here we can see that price is contained in the well-defined downtrend channel here. So this is, being on the hourly chart, this is something that you might see a breakout today or later on today. And then again to the downside, we've got a well-defined trend line here. So looking for potential breakouts to the downside here. And what we always want to do is be aware of the overriding trend. So let's take a look and see what the trend is like here. So we can see that we're in a downtrend right now. And so we might be favoring breakouts to the downside. We also pulled up an instance of another trend pullback breakout trade here. Just to make this a little bit larger. Got a little problem with the auto scroll here. Let's get rid of that. Yeah. Okay. So here there was another nice instance of this trading strategy that I was talking about earlier on. Remember we started out with a buy signal from it. On another chart on the silver, we looked at a sell signal generated. Here in the dollar yen hourly, we had a buy signal generated. So we can see that we're in an uptrend here. The moving averages are nicely spaced out. We can see that price retraced to the 100 period simple moving average, and we can see that there was a breakout from below 20 to above 20 in the stochastics. So that would have taken place here on this bar here. So in this instance, this would have got you into this nice uptrend here. So remember, when you're looking at a trading system like this, it's really important to make sure it satisfies all the different criteria that you set out. And so, for example, there'll be many instances when price pulls back to the 100, but stochastics isn't doing the right thing, and one of the other filters isn't working out. And keep in mind that you could also add additional filters to this. So something else that you might add to it is you could, let's say you're looking to get into a long trade and you want to get even higher success rate for your long trades. You could look at the 4-hour chart and only take long trades when you're in an uptrend on the 4-hour chart. Conversely, if you're looking at a sell signal, you could put an additional filter on there by only getting to sell trades when you're in a downtrend on the 4-hour chart. So these are just concepts that's a good idea to experiment with, but interesting system. So that about rounds it up for today. I want to thank everyone for joining us today. And if you do have any questions, shoot us an email at webinar@octafx.com. So once again, thanks for joining us, and look forward to catching up with you again later. Bye for now.